Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn and Kansas City wheat. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Chicago wheat. The dominant longer term pattern here, one which I described 11 weeks ago when I said, and I quote, there was something that came to light by my looking at the longer term charts for my annual review earlier in January. Is a March/October 2025 to date descending triangle pattern. It's currently 501 and a quarter to 541 and a quarter. End of quote. The break above the descending triangle pattern 11 weeks ago led me to naming what I thought would be some very, very long-term targets. The primary target at 626 even was easily reached. But that left a secondary, much harder to reach target, originally up off the top of my daily chart, but now sitting quite a way higher as target X in the 668 even area. I'm now having doubts about the market being able to reach it, and I'm considering retiring it, but not just yet. On top of all this, 6 weeks ago, I also put forward an old technical analysis technique, but one I recall worked well in the grains during the start of the Russo-Ukrainian war back earlier this decade. It was doubling, tripling, or even more of the bull channels. In this case, specifically, the late January to mid-February bull channel, which doubled up became currently 616 to 643. This provided some guidance as prices started higher in March, but come the beginning of April, and prices have slipped back within the broken late January to mid-February bull channel, currently at 589 and a quarter to 616. Finally, I'd like to go back to a point I spoke about 7 weeks ago, and ever since, and I quote, then there's my final point. It's again something I saw from my longer term monthly charts earlier in January. It is a May/July 2023 to date bear channel, highlighted in purple on my daily chart. The lower purple bear channel line is below the bottom of my daily chart. The upper bear channel line is closest today to the market, currently 611 and 3/4. End of quote. Well, we have been testing that purple upper bear channel line since the beginning of March, most recently yesterday. It has been pierced, but it has not as yet been broken. I suspect it is the primary bearish force out there right now. This purple upper bear channel line is now bearing down on congestion between 592 and a quarter to 594 and 3/4, as well as the more recent lower bull channel line already mentioned. Plus, it's entering the frame from below is the green rising short medium moving average, currently at 560. This squeezing between these two competing forces will carry on for a bit longer, but please be acutely aware of them, as at some point one of these forces will have to give way. Chicago corn. The key pattern here continues to be, as you can easily see, the August 25 to January 2026 dark blue bullish shift pitchfork. We're in between the dark blue lower time below, which is currently at 448, and the middle time above, currently at 467 and a quarter. Additionally, we have nearby, as we have seen this week, support from the mauve medium moving average, currently at 449 and a half, as well as to a somewhat lesser extent the green short medium moving average, currently 454 even. The lower trendline extension, currently 454 as well, of the July 23 to January 24 descending triangle, and not forgetting the 50% Fibonacci line for the whole of the 2025 move at 454 and 3/4. Now, back at the start of the year, we saw the market build an early January to early March bull channel, and that's currently at 448 to 459 3/4. The market eventually broke on the upside at the start of March, and I at the time applied an old technical analysis technique, but one which I recall worked well in the grain and starch markets during the start of the Russo-Ukrainian war back earlier this decade, and that was doubling, tripling, or even more of the bull channels. I did this, and the tripled up upper bull channel line, currently at 484 and a quarter, was, along with the dark blue upper tone of the bullish Andrews pitchfork, currently at 486.5, an effective resistance and cap on the market. So we are right now sitting back within the dark blue bullish shift pitchfork and back down within the original broken but seemingly still echoing support of the original bull channel. At the moment, despite being so low down, the supports below, well, they look pretty good, and I'm curious to see if this will be the case next time I look at these charts here. Kansas City wheat. Much as we have seen in the other grain markets, the rise we saw since just before Christmas last year had formed a more than reasonable looking December 25 to mid-February 26 original bull channel that prices broke higher from 6 weeks ago. I applied here as I've done elsewhere, and I quote, an old technical analysis technique, but one which I recall worked well in the grains during the start of the Russo-Ukrainian war back earlier this decade. That is doubling, tripling, or even more of the bull channels. Now, tripling this higher, which is currently 634.5 to 667, gives another topside resistance. End of quote. Well, the tripled up upper bull channel line capped the market throughout March, but we saw a definitive move lower below this tripled up bull channel last week, only to see it caught late last week by the doubled up lower bull channel line below, currently at 601, plus probably also held by the rising green short medium moving average, which is currently 599 3/4, followed by a gapping move higher this week, such that we are back within the tripled up bull channel again. Thus, the doubled up and tripled up bull channels are running the market slowly higher for now. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.